Hi, my name is Aslan and I'm presenting China Mobile.
China Mobile is a world-leading telecom company. It has more than 700 million customers and is present in China, Hong Kong and Pakistan. From this one-year chart, we can see that the stock is on a downward trend with RSI around 30. Looking at the relative world chart, we can see that China Mobile has consistently generated CFROI above its cost of capital. Management has done a good job in creating wealth by growing the firm's asset and the stock performance responded positively. Looking at this chart more closely, we can see that CFROI levels are indicating possible fade as high past level attracted competition. From this chart, we can easily see that market expectations are too bearish considering the actual level of CFROI and the whole global average of 6%. Banks like JP Morgan derive the target price of 78. We think their assumptions are too bearish because of the actual position of China Mobile in its market, its CFROI, the margins and asset turns which are above its competitors. BNP derive the target price of 105. We think this price is too high considering the possible increase in competition and the decline in margin in the sector. Lastly, the figure below shows that the telecom market is not far from saturation as total number of clients reach 1.17 billion. The hold-based model gives us a warranted price of 142. The model is based on a yearly increase in sales of 6% until 2015, which is in my view highly unlikely. The model is also based on margins that are too high considering the actual declining trend. Plus, the discount rate doesn't take into account the government action which could negatively affect the company. Using the flex valuation, we derive the price of 95. This is based on a small but positive increase in sales and the decline in margins. We also adjusted the discount rate to account for regulatory risk faced by the company. This price estimate is consistent with the multiple valuation using the median EV/EBITDA multiple. The sensitivity analysis shows that even with a decrease in CFROI to 4% and the negative asset growth rate of 4%, the stock is still worth buying. Based on this analysis, I recommend to buy the stock. Thank you for watching.